maybe in some measurement ways, the bubble has burst anyways. I don't have the numbers in front of me, but my guess is 80% of the debts are trading below net asset value now. So if that's not already a bubble burst in the sense that how would that bubble burst?
Tom Lee believes 2025 marks a historic turning point for crypto, a convergence of regulatory clarity, institutional adoption, and real-world blockchain integration that pushes digital assets firmly into the mainstream. After years of uncertainty, the regulatory landscape has shifted dramatically. The previous administration's hostile stance created existential risks for banks engaging with crypto. That era, Lee argues, is now over. The new administration's pro-innovation posture has unlocked unprecedented confidence across financial institutions. Simultaneously, stablecoins have become the breakout product of this cycle, a ChatGPT moment for crypto, offering speed, low cost, and transactional finality that traditional payment systems can't match. With Circle's IPO capturing Wall Street's attention, Lee identifies Ethereum as the central beneficiary. Ethereum's reliability, 100% uptime since inception, and dominance in smart contracts position it as the backbone for tokenized finance, the next evolutionary phase in global capital markets.
Subscribe to Daily Bitcoin Trends for expert insights, real-time market updates, and proven crypto strategies. No hype, just smart analysis to help you make better decisions in crypto.
In 2025, a few things had come into place that made me quite interested in thinking that crypto was about to break more into the mainstream. And a few of the pieces, and not in a specific order, was number one, the regulatory environment had gone through a sea change because for the prior administration, crypto was under siege, and I think there was enormous regulatory risk. In fact, several banks were essentially ended their existence because their involvement with crypto. And in this new administration, it's proven to be very crypto friendly. The second is that projects that are native to crypto have now broken out into the mainstream as runaway successes that have caught the attention of Wall Street. The first of these, and maybe the most important, has been stablecoins. And that's why we called it the ChatGPT moment, that stablecoins have proven to be a pretty attractive payment method for consumers, especially because it offers finality and low cost, and has really grown. And the Circle IPO caught the attention of Wall Street as well. So to me, that was the first moment. And when I looked at what this meant, it became pretty clear to me that this was actually a very bullish pivot for Ethereum, because Ethereum is the largest smart contract platform, also the only smart contract blockchain with 100% uptime. There's never been an outage in the Ethereum network, which is a huge deal and a huge accomplishment for a decentralized blockchain. I would argue Ethereum has done well this year, and it is outperforming Bitcoin. And as you know, it has made an all-time high. You know, Ethereum is outperforming Bitcoin year to date, and that's not just because of the rise of Ethereum treasuries. I think that's what many people would like to conveniently say, but there's been a lot of Bitcoin treasuries this year. A lot more actually capital raised around Bitcoin treasuries than there is Ethereum. I think that Ethereum is more relevant to what's happening. Tokenization is a real thing. Wall Street is building projects. You know, Swift announced that they're experimenting with Linea to do basically rebuilt Swift on the blockchain. This is not vaporware made up by companies. These are real projects that are taking place, and it's being built on Ethereum. I would say that explains more of the rise than Ethereum treasuries. And the second thing that has really broken out into the mainstream is prediction markets, and prediction markets run, a lot of them have their own ERC20 token, which means they're running on Ethereum. So I would say, again, as people look at the future of crypto and the idea of tokenization and prediction markets and how that's transforming traditional markets, that's a story around smart contracts and Ethereum, and that's why Ethereum is doing better. I don't think it's just because of Ethereum treasuries. And to give you a proof of that, there's plenty of other crypto treasuries out there. There's Solana DATs. It's not helping Solana outperform. There's hyperliquid DATs. I think the story around Ethereum has a lot to do with the fact that there's a lot happening on Ethereum. Wall Street was the big play in 1971, not gold, because gold is capped at 20 trillion. As we think about 2025, and now we're tokenizing not just dollars, but stocks and real estate and bonds, people may correctly say, I want to own digital gold, but gold's a $21 trillion market. The tokenization of everything else, as Cathie Woods has pointed out, is in the quadrillions, especially as AI moves towards micropayments, which need to happen on the blockchain. That to me is a bigger opportunity. And that's why in Ethereum is where a lot of this is going to be built. So to me, Ethereum should have a network ratio to Bitcoin that matches its old high. I think Ethereum has a very large and well-established development community that I think, there has been a lot of changes to Ethereum in the last few years. And maybe also the community and the foundation hadn't been focused on creating necessarily Wall Street friendly innovations and products. I think that had changed this year. And part of it has probably been the fact that one of the biggest sort of consumers of ETH gas has been stablecoins. But it's really the Ethereum Foundation really gained some new leadership that has really directed itself and said that let's make ETH friendly to what would be attractive to Wall Street. So I think that there has been a real change, and it was evident to me at Token 2049 that developers and the Ethereum Foundation really care about building and making upgrades that make Ethereum friendly for Wall Street. It is the biggest blockchain. I mean, at the end of the day, when you look at how these layer ones capture value, and again, Ethereum is very clever because it has layer twos, but the layer ones capture value because as more assets are created or tokenized on a blockchain, a portion of that value accrues to the blockchain. I mean, that's just what we've seen. Like the floor for Ethereum has been the value of the real world assets. So it makes sense to me that if Ethereum is where most stablecoin creations are taking place, and it is the majority, more than 60%, and if you look at incrementally, it's growing actually, then Ethereum is going to benefit from that exponential growth in stablecoin demand. But of course, that's just the front end. There's a lot of other things that will get tokenized. I mean, a stablecoin is just a tokenized dollar. And once you tokenize that base layer of money, it's going to make sense to tokenize other things on the same chain that you tokenize the dollar on.
Lee argues Ethereum's current outperformance over Bitcoin is far more structural than speculative. The key lies in utility, real projects, tokenization, and prediction markets, all anchored on Ethereum's architecture. Major financial networks like Swift are already experimenting with Ethereum's Layer 2 solution, Linea, to rebuild global payments on-chain. This isn't vaporware, it's the early infrastructure of Wall Street 2.0. As stablecoins gain traction, Ethereum captures direct value because 60% of all stablecoin activity originates there. And once money is tokenized, Lee explains, it's only logical that bonds, equities, and real estate will follow on the same chain. This is the tokenization flywheel, value compounding around the base settlement layer. He draws a parallel to 1971 when Wall Street financialized the newly synthetic dollar, creating a $100 trillion market. Now, Ethereum stands to replicate that feat, not through fiat innovation, but through digital asset tokenization on a decentralized network.
I could buy an ETF. Why do I want to buy that? And by the way, that cursory observation probably mostly holds true because a lot of crypto treasury DATs trade below the holding of their crypto. So, I mean, to your point, they've not been creators of shareholder value. I think that is showing you that that's how capitalism works. And it shows you DATs are not just passive vehicles. Capital markets means companies that are executing properly will get capital and be supported by investors. just to give you some high level numbers, MicroStrategy and Bitmine, which are the two largest crypto treasuries, both trade several billion dollars of trading volume a day. In fact, Bitmine is the 26th most liquid stock in America today. And the two companies combined are 86% of all trading volume for the DATs. So of the 200 plus DATs out there, most only trade by appointment, quote unquote. So they're maybe even less liquid than an ETF. But in Bitmine's case, it's not just a DAT. We're the largest holder of Ethereum in the world. Almost 2.9 million tokens, okay? And that totals over $12 billion worth of Ethereum. What does that mean? Well, one, we are providing a huge amount of security because that's almost 2.5% of the Ethereum network. So when we start staking, we are the security provider for Ethereum with permanently held ETH. I mean, that is the most secure staking entity out there, right? Because we're not a fund with LPs that will redeem. And because of that, the Ethereum community has actually viewed Bitmine as an important implementer of like what Ethereum cares about. So we're in dialogue with the Ethereum Foundation and with a lot of core developers, and they want us involved in a lot of their DeFi projects. And we could even provide standby liquidity to the ETFs out there who've asked us to consider that as a role because they want to stake ETH, but they have liquidity requirements. So we play a role there. On the flip side, we are the institutional road on-ramp for people to own Ethereum. Because as you know, if you look at the institutional equities out there, we're the only large cap way to get direct exposure to Ethereum as a factor bet. In fact, Bitmine, I think, is like the 480th largest company in America today on market cap. So that means we will almost certainly be included in the Russell 1000 index at rebalance. So every fund has to now decide, do they want to have a factor bet on Ethereum? Because of that role we have, we're essentially a liaison between how Wall Street views future upgrades to Ethereum to the community. And that's the role we're playing. So we're not just a DAT, we're becoming, one of the important voices within Ethereum. And that's really was our goal. That's why when Bitmine was created, our target was 5% of Ethereum, because that is the power law at work. We would be playing a benevolent role. And that was part of our original presentation, that we would play a role in the DeFi community, and we would also do moonshots, which were selective investments in projects that would strengthen Ethereum. Regarding MicroStrategy, he made the pivot of his company, and it was a very bold pivot where MicroStrategy went from being a security company that was very mature and stable to one where he decided to hold Bitcoin as its primary treasury asset and basically redirect the company's future on using cash flows and other markets to grow Bitcoin. That was a big move in August 2020. We were watching that with a lot of interest, and actually at Fundstrat, we were highlighting Michael Saylor and his efforts, because that to us also represented the only way for many institutional investors to get direct access to Bitcoin. And it's been a runaway success for him, because, he had maybe in the first few months about $13 of his stock price was $13 and maybe $1 of Bitcoin per share. Today, MicroStrategy stock is now 330, so up close to a 27 times increase, and his Bitcoin held per share is now around 227. So he has successfully grown the stock price because he's grown the Bitcoin held per share. So I think it's been a true success story. And now he's one of the largest holders of Bitcoin in the world with nearly 3%. Maybe in some measurement ways, the bubble has burst anyways, don't you? I mean, if I don't have the numbers in front of me, but my guess is 80% of the DATs are trading below net asset value now. So if that's not already a bubble burst, in the sense that what how would that bubble burst? Because, like a crypto treasury shouldn't trade below NAV unless it was captively held crypto. Because, if you're a crypto treasury and you're trading below NAV, you can take action to restore your valuation. You can convert to an ETF. You could return all the crypto, so sell it and return cash, and people would come out ahead. So I think that, like, I'm not even sure I want to use the word bubble burst, but like I would say, is the market becoming discerning? I think it already has. If we go back to 1971, when the dollar became synthetic, because that was the year the dollar was no longer convertible into gold, so it became a truly synthetic instrument. Okay. Then we can look at how the world forked. The first was gold, and people bought gold, and gold performed well and became, today a $21 trillion asset class. But the second thing that happened was that the question became, if dollar is synthetic, do we have to use dollars? Can we use Deutsche Marks or francs or yen or pounds, right? The pound could have come back. But Wall Street stepped in and said, let's innovate and create US products to make sure people use dollars. And the dollar became hugely successful. It's only 27% of GDP, but it's 53% of central bank reserves. And it's 84% of all financial market quoted pair trades. Okay, so the real play when the dollar became synthetic was Wall Street created a $100+ trillion market for dollar assets.
For Lee, Ethereum's evolution isn't theoretical, it's quantifiable. Institutions like BitMine now hold nearly 2.9 million Ethereum, worth over $12 billion, representing about 2.5% of the entire network. As the largest institutional staker, BitMine isn't merely a treasury, it's an active security provider and liquidity bridge between Wall Street and DeFi. This mirrors what Michael Saylor achieved with Bitcoin and MicroStrategy, a model where corporate balance sheets become direct conduits into blockchain value capture. Lee contends that Ethereum's path mirrors the dollar's ascent after 1971. Ethereum, however, anchors a system capable of tokenizing quadrillions in assets. As AI-driven micropayments, stablecoin rails, and tokenized securities merge, Ethereum becomes the financial internet itself. The implication is profound. Bitcoin remains digital gold, but Ethereum is rapidly becoming digital Wall Street.